What's going on, everyone? My name is Nicholas Merton here from Data Dash, and today is November 6th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to do something big. I want to spend some time to try to crunch the numbers of just how positive a Bitcoin ETF mixed in with a routine for your halving cycle could be for Bitcoin's price. A lot of people are really optimistic about these upcoming events, and I just want to spend some time today to try to crunch the numbers on what these two things could mean for Bitcoin's price direction. They're obviously going to be positive things, no doubt about that, but the question is how much? And how much optimism can we really expect from these two events as we go forward into 2024? We've got a whole lot to cover here in today's video, so if you guys happen to enjoy it, consider dropping a like, but let's go ahead and kick off the rambling. All right, I want to start here by focusing in on the bigger of the two stories here, and that is a Bitcoin ETF. I don't care if you're bullish or bearish. At the end of the day, guys, when you're analyzing the estimates for inflows here for what a Bitcoin ETF could mean for markets, and I think within a shadow of a doubt here, even for someone like myself who's leaned a bit more bearish over the past year, this is going to be a bigger story than the halving event. The halving event, as we'll talk about later, has a waning or weakening effect over time with each and every cycle. And we'll talk about why that is later on, as we've covered here on this channel before. But let's go ahead and focus in on the big story here. I want to talk about the Bitcoin ETF because that is the narrative that has everyone juiced up. That is why Bitcoin, since back here in September, in many ways, has come from 25K towards around right under 35K here at the time of recording. And a lot of this has come about due to some of the estimates that have come out from sources like Galaxy Digital's research wing that said that essentially Bitcoin could see in the first year over $14 billion of inflows into the Bitcoin ETF products, whether that's the BlackRock iShares Bitcoin ETF, whether that's the multitude of other ETFs that could potentially be approved. And again, we don't have any guarantee these are going to get approved yet, but it's looking more and more likely that we are likely going to get some of these ETFs approved, if not all of them. And therefore, this could open up that new wing of inflows into the space. Galaxy Digital's research arm believes that could be $14 billion in the first year. That essentially in the next year, it's going to increase on top of that by another $13 billion, so an additional $27 billion of inflows. And they believe that there's going to be another addition on top of that that's going to lead that number, if I remember correctly, towards around $39 billion. So a large increase here of inflows that originally just weren't able to come into the crypto space. That's the narrative that has everyone really juiced up here. And that it's going to get bigger and bigger and bigger over time as there's going to be more allocation towards the space, especially when you start to kind of compare it to gold, right? That's the idea here that a lot of people are really juiced up about. Now, the actual post here and the research that came out, which was written by Charles Yu, and I think overall Charles actually did a pretty good job here working with the data he has available and really looking at it from the broad macro perspective. I really appreciate that personally. Even as someone who, again, is leaning on more the kind of bearish camp, I think overall Charles didn't go really ballistic here. He kept his estimations moderate here and really actually went in line with analyzing the broad picture of all of the sources of assets and liquidity in the world and how it is going to take time for those inflows to come into the space. So again, I give hats off there to Charles on that. I think he did a relatively good job here on this research piece. It's difficult to piece it down here, as we'll discover as we go throughout this conversation today, but I just wanted to start off by saying that here. Now, there are a couple key findings in Charles's research here as we go throughout the story here. First off, there are already 842,000 BTC or $21.7 billion of Bitcoin currently being held in ETPs and closed-end funds. This is, again, the existing demand that has already played out through either foreign markets, but also as well by some of the existing ETN products like Grayscale's GBTC. So there's already a pretty large holding here of exposure in financial markets towards these BTC holdings, about $21.7 billion of demand that has already come in from these channels. However, as we all likely know, there are some restrictions that hold people from getting into a Bitcoin ETN. While I've made the argument here that yes, you could go out and buy MicroStrategy, you could buy a whole range of Bitcoin miners and different ways to get exposure to the space, at the end of the day, there are limitations for pension funds and some pretty large wings of the financial sector. Now, I'm not going to dive through every single bit today, but essentially speaking, this is the addressable market of new assets or specifically forms of money managers and people who could address and adapt liquidity towards Bitcoin here, around a $48.3 trillion market. However, as we saw here from Justice's research, the question is how much of that is, again, going to be, where Bitcoin funds can actually flow in there, right? Now, what he essentially did in a model here, and I think this is, again, a pretty good model here. It's not bad. Essentially, what he assumed is that there's going to be a rollout period. It takes time for these wealth channels, whether you're talking about individual, RIAs in this case. These are people who are essentially managing money, usually from their own practice for other individuals. You're talking about banks. You're talking about broker dealers. No matter who it might be, these channels are going to take time to roll out. Sometimes they have a 1-year close-off period until funds can really be offered, or ETFs can be offered to their client base, and maybe they require a certain AUM, or assets under management, so that it's not seen as some really small speculative asset. There's a clear market cap threshold that shows that this market is sustainable. That will take time to roll out. So that's what this part here is, as he's essentially having percentage access over time. And then what he did from there is essentially that 10% of this addressable market here is going to consider exposure here towards these assets, and that they're going to essentially, from the assets that they manage, or the total portfolios they manage, they're going to put 1% of their capital into Bitcoin. Again, I've seen some really banana expectations out there. This actually, again, is not a bad estimate here, right? I would say, again, this is like kind of in line with what I think professionals expect here, that 1% max exposure here, and that not all investors are going to want to get into this space, guys. So again, hats off to Joseph here. Good foundation here to work with, 14.4 billion. And essentially he's expecting that there's going to be another 10% here, another 10%, right? We're going to essentially see this kind of stack up here of inflows by year. Now this is where, again, the gray area starts to build in here, that essentially more and more people are going to be exposed to the space. This is where I might disagree a little bit, but nonetheless, let's just kind of run with the research here. So, and along with that as well, Joseph includes some really important metrics here to just kind of get a visualization of what a Bitcoin ETF could mean. He mentions the AUM, or assets under management, and current ETFs for gold versus Bitcoin. Again, as we can see here, a huge 9x multiple in the amount that's already existing in gold versus Bitcoin ETPs. He also measures global market cap, with gold still being around a 24x multiple versus Bitcoin. That has changed a little bit in the near term, but still big difference here, right? And that's a narrative that everyone always kind of goes off of, seeing that gold may be circumvented by Bitcoin. And then, of course, as a kind of contrarian point here, he does note here that already 4.3% of the existing supply of Bitcoin is held within ETPs like the Grayscale ETN, like the foreign ETFs that are in foreign markets in Europe and all kinds of regions across the world, Canada, etc., that already have Bitcoin exchange traded products, versus gold, which only has 1.6% demand coming from ETFs. So again, important point here, and I think it's really fair of Joseph to share that here at the end of the day. But the key thing here is that as we go through the research, he talks about the price impact here. I don't have any major, kind of setbacks against his kind of measurements here. And generally speaking, he says that we could see $126 billion to $454 billion of positive inflow over the long term into Bitcoin. Okay. Now again, I've seen a lot of pie in the sky metrics out there, a lot of way overtly optimistic estimates that Bitcoin, everyone is just going to expose 1 to 2% of Bitcoin. And I have to say, Joseph, give my hats off to you. I think this is actually a really positive piece here. Well, I've got some maybe disagreements about the longer term weighted impacts. I think the immediate ones are actually quite accurate. So I again want to say hats off here. Someone who's even a bit more contrarian to this viewpoint of Bitcoin ETF being really optimistic. I think that, again, this is actually a pretty good amount of research. So from here on out, though, I want to crunch the numbers. I want to spend some time to talk about these topics of inflows and outflows, because as Joseph is focusing on here, and as many people are focused on with the Bitcoin ETF, I think most of us understand from a fundamental perspective that inflows and outflows are what drive the price, not just of Bitcoin, but any asset in the world. We have talked about that time and time again here in this channel. We're also going to talk about when it comes to the halving event, because fundamentally that is what drives market direction. Are today, over the next week, over the next month, over the next year, are there going to be more people market buying, taking the best available price, or market selling? And while bid and ask, support and resistance can help to some degree, at the end of the day, what drives direction, what leads Bitcoin's price to accelerating or deaccelerating, is essentially inflows and outflows. And if buy-side pressure and sell-side pressure remain roughly the same here, Bitcoin's current $681 billion market cap will likely stay around that range, give or take some percentage of inefficiency here, right? We're essentially going to assume that with inflows from buy-side pressure and outflows from sell-side pressure remaining roughly the same, give or take within a year, we have $681 billion market cap. Now, that's with current things in place. However, let's go ahead and talk about some of the impacts here of what an ETF could mean for the market. Now, I wanted to do something a little bit different today because Joseph's estimate is around $14 billion. But I want to say that Joseph may be being a bit too bearish here today. I actually think that we could see $25 billion of inflows because we're playing devil's advocate today. We're going to play a little bit more optimistic here. What if Joseph is being, as he stated in his argument, a little bit too conservative here? What if, again, Galaxy Digital maybe got it wrong and that the more optimistic crowd is actually right? What could this mean for Bitcoin? Well, let's talk about it here. Well, we can see, let's say in our estimate that we were going with $25 billion. Along with that as well, we're going to have some sell-side pressure removed from the market, the halving event, around $5.58 billion. Now, how do we get to this number, right? The reason we get to this number here is because at the moment, we're currently seeing 6.25 BTC per block every 10 minutes. So this is an inflationary subsidy to confirm transactions on the network. A very fancy way of saying that for each Bitcoin block, which is confirming transactions from one person to another, essentially these miners are being rewarded. Whoever gets to mint that new block or essentially mine that new block is going to be given 6.25 BTC. But with the halving event, that is going to change. So instead of every 10 minutes, so essentially 6 intervals in an hour, 24 hours in a day, instead of 900 new BTC being made per day, when the halving kicks in, that's going to go to 3.125 BTC, which is only going to be 450 new BTC per day. So if you want to really crunch that down on an annualized basis, that's going to mean that we're going to have essentially $15.3 million worth of Bitcoin being generated less per day. And outside of that as well, you're also going to have $5.58 billion less Bitcoin being created every year at current market capitalization. I could crunch down to the exact numbers on Bitcoin, but this is just a way to kind of help visualize it here, right? We're essentially taking the 450 Bitcoin that are not being created per day, multiply their 365 days, and multiply by the price. You could just not multiply by the price and you're going to get the amount of Bitcoin, right? So essentially, these numbers sound really big. These sound like numbers that, hey, whoa, $5.5 billion, $15.3 million change in the daily market buy and sell side pressure. That's got to be huge for Bitcoin, right? Well, essentially, on an annualized basis, this is going to be a $30.5 or $30.6 billion positive market order flow change for Bitcoin in our optimistic scenario. That sounds really incredible on the surface. I can understand why a lot of people, if they were kind of going through this number crunching, thought, wow, that sounds pretty cool. That must really be driving up Bitcoin's price. Well, let's go ahead and analyze the last cycle and see if we can get some understanding about how much inflows matter when it comes to Bitcoin's price. I want to go ahead and spend some time to analyze the prior cycle returns. Now, there are really two low points you could utilize. In this case, you could go all the way back towards the lows in December 2018, which would have left us with a total 2,273% return in Bitcoin's price. Some may also use March of 2020's low, as that was really when the trend direction picked up and continued all the way to new all-time highs, which was a 1,700% move. But generally speaking, I want to draw your attention here to stablecoin liquidity, because it doesn't matter if you're using the 2,200% return from bottom to top. It doesn't matter if you're using the March 2020 lows, where we saw essentially a 1,700% increase. What we find during that period of time is that something else increased, and stablecoin liquidity is what increased by over 2,500% from here during the period of time around March of 2020. Where essentially we saw this massive injection of liquidity, which was following the prior QE injections from central banks, the kind of blow-off top bonanza of the last decade of easy money, where interest rates were brought back down to zero. Money printing was at its fastest rate in history. And because of this, there was a home for that liquidity in stablecoins and in the cryptocurrency space. And we can, again, if we want to go off the idea that, hey, Nick, actually it was a 2,200% return from that absolute low. You got to be more proper about that. Well, that's totally fine. I can totally drag, for example, this metric, right, of stablecoin liquidity. We can take it all the way back down to where it was during December 2018, a 6,372% increase in stablecoin liquidity. We can go there if you guys want, like to just kind of play devil's advocate and play fair here, right? But my point here is that at the end of the day, no matter where your low point is and where your perspective is, there is no denying that stablecoin liquidity played a big role in the move for Bitcoin. And if we didn't have that on-ramp, if we didn't have that means of liquidity, we wouldn't have had the price performance we had. But beyond the price performance itself, I want to focus more specifically on the ratio between the increase in stablecoin liquidity or new inflows versus that of Bitcoin. Because as we can see here, no matter what low point you're using here, stablecoin liquidity itself outpaced Bitcoin. It became a larger portion of the market. There are some different ways to visualize this here. We can take Bitcoin and divide it by USDT and USDC. As we can see here right now, versus the kind of long-term trend, we are in the typical resistance band where essentially markets are overbought. Like in June of 2019, like here in January, between January to April of 2021, even here during some shorter term windows like October 2021, which again we're leading towards the November highs here. And we can also see that when this is at the lows here, this is when it's usually time to buy. It's time to get in, there's mass capitulation, and it might be time to go long to some degree. And there's another way to visualize this, which is just taking a look at USDT and USDC dominance, basically stablecoin dominance in the market. So as you can see here, not only is stablecoin liquidity at its lowest point here in line with where it was in January of 2022 versus Bitcoin, that alone already might be a cause for concern. But when you consider the more important thing, it's that as Bitcoin as an asset grows, it is going to have a growingly larger appetite for liquidity. And while stablecoins may continue to decline as their percentage of market share, we are now going to be ever-growingly dependent on that institutional liquidity for Bitcoin to drive higher. Some people may not feel that that's an issue to be concerned about. But essentially, if we even take the current estimates here that we talked about, the more optimistic estimates, including the halving, as well as maybe a Bitcoin ETF bringing in $25 billion this year, right? That is a net increase here again of $30.5 billion in inflows. But is that going to be enough to spark a bull market? Because if we take a look back at that stablecoin liquidity increase during when Bitcoin was at a $3,900 price at the initial start, not $35,000, near a 9-10x multiple from where it was then, right? Essentially in that first year from March of 2020 going in towards March of 2021, we essentially saw a 575% increase, or $31 billion, roughly about what our optimistic model is expecting here now, in stablecoin liquidity, which was a 575% increase. And then the year after, in order to actually retest those highs again, a 262% increase, or $96 billion. My point here in all of this is that I think, and even though Joseph did account for this to some degree, he looked at gold inflows and the essential weakening effect that billions upon billions of dollars may have on that versus, say, Bitcoin, which is a smaller asset. And while I appreciate him analyzing that, I think the biggest misconception here that people are not understanding is that Bitcoin's appetite for liquidity, in order to actually make real price acceleration, has gotten bigger and bigger with each cycle. And this Bitcoin ETF, while many people may be having their jaws dropping at this big figure of, wow, $14 billion, or in our more optimistic kind of theoretical model, $25 billion or $30 billion, they don't realize that that's not really that much in the grand scheme of things, because we come back to it. Bitcoin is a $681 billion asset. It is not, if we zoom out here, back where it was then, it's not a below $100 billion asset like it was before. Right? During that window of time, from a $72 billion market cap to a $100 billion market cap during this capitulative lows, it right now is a $684 billion asset, well above $500 billion. And it's not to say that Bitcoin can't move up from here, guys. I'm not here to say that Bitcoin can't continue to accelerate. If the Bitcoin ETF is going to get approved, yeah, Bitcoin's price can move up. But if we're looking at even, let's just say, for example, like if Bitcoin's appetite hadn't grown since the last cycle, if we are really going to get the inflows we discussed earlier, right? This $30 billion infusion of capital into the space. From a comparative percentage move, you probably at best case expect a 20% continuation from this point. And the reason for that here is because we've only expanded liquidity by $30 billion here. Stablecoins are not moving up. So the ETF is where we have to really place our bets here. And if stablecoin liquidity is only moved by $30 billion, and we take measurements from the prior performance in Bitcoin's price following increases in stablecoin liquidity or new inflows, we really get somewhere in this ballpark here. Like nowhere near new all-time highs, not smashing through those prior all-time highs and really just breaking out to trillions of dollars. right? We're not getting that kind of demand and inflows. And even though, as Joseph points out in the research at Galaxy Digital, I hate to keep addressing this, Joseph's work. It might be maybe the broader team's analysis as well. Even though you have those increases, and I agree that maybe there could be increases over time rather than just like huge blowout of exposure and then a decrease over time. I think that the important thing we're missing here is that those big figures, $30 billion, again, those incremental increases are not going to be enough to sustain a huge multitude or multiple move here for Bitcoin to really go in and set new all-time highs at, say, 100K or 200K. That's my point here I want to bring up here today, guys. While we don't have all the metrics to work with here, we don't know how much real demand there's going to be for a Bitcoin ETF. It may be that the $14 billion estimate may not even play out. The point I wanted to make here today is that even if all the optimistic, kind of talking heads in the space, those who are doing research on the industry, are going on and saying that there's this much demand for Bitcoin ETF, even in a more optimistic scenario, it may not be enough. And that's the reality that so many people have not taken the time to consider. It's why we remain contrarian here, guys. And that alone as well is considering that some of that has not been priced in. And the reason I say pricing it is not because people are anticipating a Bitcoin ETF. That alone, yes, could play a role in already the price acceleration we've seen. But the actual more vital point here is that if we understand what really is going to drive demand for Bitcoin when it comes to Bitcoin ETF, is not people buying the iShares BlackRock ETF. It's from BlackRock buying spot ETF Bitcoin on Coinbase, on Kraken, on Binance, on any place that they can get liquidity, buying an OTC, whatever, buying that actual spot Bitcoin. And in order to actually have a one-to-one backed ETF with Bitcoin, you got to buy the Bitcoin. So what if a lot of this price move here has been from BlackRock? Now, we've been the first in this channel to say that it's a lie to say that BlackRock is buying Bitcoin because they're buying MicroStrategy on these shares. As we've emphasized before, BlackRock itself, similar to State Street, similar to Vanguard, are basically these mass money managers that allow you to buy passive ETFs in a whole range of sectors. Right? That is not evidence of them buying all those companies. They have to forcefully buy them to put them into ETFs and different types of investment vehicles. However, if BlackRock off the books, or essentially kind of behind the scenes, has been buying Bitcoin to seed for their potential ETF approval, well, there's your buy side demand here. It's already priced in to a large extent. Those institutions, those big money managers buying the Bitcoin spot ETF that BlackRock is making, that doesn't set in the demand, right? You're not going to have the ETF price really significantly deviating away from the actual spot Bitcoin price. The demand, the purchase, the inflows have already happened. BlackRock's already done it. So that's another thing you've got to consider here, guys, right? When we're having these big price estimations here, these big market cap expectations that Bitcoin is just going to be destined to go where gold is, if not higher. It's not me trying to be a perma bear here, guys. It's not me trying to be cynical. Like I said, I love the idea of a Bitcoin ETF coming to market. But man, if your hopes for a Bitcoin ETF are driven in your hopes for acceleration or appreciation in the price of Bitcoin, and you're placing all your bets into that going into this macro environment, where, by the way, we didn't even spend the time to talk about the potential negative outflows a recession could cause, Mt. Gox could cause when the unlock happens in October 2024, as they pushed back the repayment date yet again, the inevitable date that will come one day. They've pushed down the line towards October 2024. That would be about $4.8 billion of Bitcoin hitting the markets. Again, they may not sell it all, right? Same way, again, at the end of the day, that just because BlackRock may be issuing a Bitcoin ETF similar to Grayscale's ETN, there may not be the buy side demand for it, right? So my point here is this at the end of the day, guys. When we look at the numbers, right, we're looking at it through our model with rose-tinted glasses here. And even with rose-tinted glasses, we are not seeing some major impact like we did with the on-ramps from offshore investment funds, family funds, through USDT, through USDC, and the already existing institutional channels that could have garnered exposure to Bitcoin. That's my point here, guys. It's not looking incredibly optimistic. And this, again, I hope provides some clarity for those of you who have been nice enough to kind of stick around here towards the end. I really appreciate that, to hear my point of view, because I don't mean to come across as negative, and I do love crypto in many ways. But boy, we've got to be realistic about our expectations, guys. even considering some of the more well-rounded research from people like Charles and the team at Galaxy Digital, I think the biggest problem that the broader market is missing here is really how much those inflows are going to have as a price impact for Bitcoin. I really don't think, accordance with history, with what we've seen with stablecoins, that it is not going to be so positive for Bitcoin's price going forward here, especially when you consider that Bitcoin is now a $684 billion asset versus a $75 to $100 billion asset in the kind of capitulative lows of March of 2020. We are likely going to need even more liquidity from this point on. We need those inflows from an ETF to absolutely blow out expectations to really kick off a new bull market. Because if we don't have those inflows coming in at above expectations, I believe there's a very good chance here that things could actually stall and potentially move lower here in the next few months as the sell side pressure picks up going into a potential recession, as people have a second chance to sell at a much higher price. And as the HODL mentality becomes less certain in an environment where easy money is no longer a part of the equation. That's all I'm here to do, guys, is to provide what may be very well seen as a contrarian opinion. While it's certainly not the popular opinion, it's one that's not fundamentally rooted in fear and uncertainty and doubt. It's one that's rooted in the numbers. And being a bit of a healthy skeptic here in the market when it comes towards our exuberant expectations for what we may want in the market versus what will actually likely play out. You guys know we've been here since 2017, and as I hinted before, I say all to it, I hope there's a Bitcoin ETF that gets approved this year or in 2024 or in some time in the near future. I'm not an opponent of this. It's about understanding the price impact of it. And if you've made it this far in this video, guys, if you've given me the time to kind of share my opinion, I appreciate it. I give my hats off to you, and I ask that if you got some benefit out of this, if you consider dropping a like, it's a great way to support the channel. And beyond that as well, if you guys are interested to get more analysis like this, you can always check out our newsletter here on the channel, the Dash Report. You can get 20% off with a yearly membership. We not only have a monthly newsletter that is a 20-page plus report on crypto, on stocks, commodities, as well as Forex markets, but we also have our trade alerts group. You guys get access to its exclusive market updates where we kind of cover metrics like this kind of stablecoin dominance that we discussed earlier. You guys will get access towards our mid-month webinar. And in this month's article, we talk a little bit about our kind of overall views on Bitcoin at the moment and the key metrics that we're watching, hitting on some of the topics we discussed here, but also some topics we didn't discuss today. So I want to go ahead and again emphasize, if you guys are interested in not only supporting the channel, but also getting that additional wave of content, there's a link down below in the description that you guys can click on and check out the newsletter for yourself. If you guys just want to try it, you can always sign up on the monthly, give it a shot, and if you don't like it, you don't have to continue afterwards. But that's it for today's video, guys. Thank you all so much for giving me some time out of your day to go through these metrics and kind of talk about the further price potential of Bitcoin. If you guys liked it, consider dropping a like, and until the next video, I'll see you all in the next one. Take care, everyone.